Hi there, welcome to Kneppy Invest, and welcome to three companies on the ASX that release interesting or intriguing Appendix 4Cs for the June quarter 2025. I am recording this video on the 8th of August, intending to release it towards the start of October. Definitely want to release it before these three companies release their Appendix 4C for the September quarter, more than likely towards the end of October. Okay, so the three companies I'll be featuring in today's video are three companies I don't know a lot about, including Beonic, nothing to do with Beonic Man or the $6 million man, Energy Action, something to do with energy, and also 8Common, something to do with common people. I have no idea. Anyway, so what I'm going to do in this video is I'll briefly go through what these companies do. So in a way, I'm going to discover these companies maybe for the first time, and then we'll have a look at the cash receipts. Not the cash receipts history. We'll have a look at the Appendix 4C first before we have a look at the cash receipts history, and then we'll have a look at the chart. Okay, so let's start this video looking at a company called Beonic. And I had no idea what this company does. My first inkling is something to do with robotics, because Beonic Man, $6 million man, Steve Austin. Anyway, nothing to do with that. In fact, this company did change the name. And that sort of makes sense because when I had a look at the cash receipts history, this company goes way back to about 2015, which usually means if I don't know what the company does, they've changed the name. So this company used to be called Sky-Fi, Sky with F-I-I. And I do remember having a look at that company many, many years ago, and something to do with they track or monitor customers' behavior or something like that. So for their clients, so they know their customer better, something like that. Anyway, so if you have a look at their homepage here, discover Beonic, the AI platform for places. Discover how an AI-driven platform brings physical environments to life so venue operators can drive revenues, optimize operations, and improve experiences. So sort of on the right path. But I thought Sky-Fi had more to do with malls, like shops in malls, that sort of thing. So maybe that's not exactly right. Some of their clients include, looks like Sydney Airport, Wembley, New Balance, Heathrow. So we are talking about some airports there, which is interesting. Designed for places. So this is more about places. So we're sort of, I was going to say tracking people, or you could say, if you're a little bit more cynical, they are stalking people. Anyway, so that's Beonic. I'm not sure I'm satisfied with exactly what they do. Some of their solutions, industry, airports, shopping centers. There we go. Retail, education, cities and municipalities, hospitality, categories, occupancy, and people counting. That sort of makes sense. So particularly if there is some sort of event, you don't want too many people in an area because that can lead to some bad things happening. For instance, that South Korea or Seoul Halloween crush or other stuff like that. So that sort of makes sense. Guest Wi-Fi marketing, queue management, Beonic display, whatever that is. Okay. And by service, they haven't got anything there. Services that enhance the Beonic platform. Okay. Okay, so let's have a look at this company's Appendix 4C for the June quarter and why I've included this company in this particular series. More than likely, it's because they were operating cash flow positive. Fair enough, since I am recording this video on the 8th of August, they've gone into trading halt. Just saw that. They've gone into a trading halt. I would say more than likely this is because of a capital raising. I'm just guessing. I am just guessing. Connection with the proposed capital raising by institutional and sophisticated investors. There you go. The only reason I said that is because I'd say 80% of these type of trading halts are for capital raisings for these type of companies. I've also noticed 7 airport contract with North African Airport Authority. So maybe airports is one of their services or their industries or sectors that they are servicing a little bit more. Okay, so let's have a look at this company's Appendix 4C for the June quarter. Why did I get, I wouldn't say excited, but why have I included this company in this particular series? And more than likely, they are operating cash flow positive. Then why are they doing capital raising? Okay, so let's have a look at this company's cash flow. So receipts, $6.8 million for the quarter, $22.3 million for the year. So it's a nice amount of receipts. And they are or were operating cash flow positive by $1.6 million in this quarter, and for the year negative $878,000. So there is potential. This company has hit an inflection point. Now this could be one-off. This could be one-off. I do like to see a few quarters of operating cash flow and free cash flow positiveness. So this could be just a one-off, and maybe that's why I'm including this series. Just keep an eye on Beonic moving forward. They also free cash flow positive, 796,000 intellectual property, $3 or $3,000 in capital expenditure. Not sure if that is sustainable. They do spend a little bit of money on intellectual property, which is capitalized research and development, and that is an ongoing cost. So I do like to include that when I look at the free cash flow level of a company, or the free cash flow nature of a company, whether they're positive or negative. So I would say for this particular quarter, Beonic is positive. They definitely was positive. By the way, it looks like their home base is Surrey Hills. I know that place. Okay, cash on hand, 2.2 million. Cash on hand did increase, so not a low amount of cash. So I thought maybe that could have been lower, and maybe they did burn a little bit of cash, but they are doing capital raising. So possibly September quarter would not be a good quarter for this company in terms of cash levels. Maybe they're burning through a little bit more cash and they need cash on hand. Or maybe they're making an acquisition. That's also a possibility. A little bit of debt, $4.7 million. And maybe what they're doing is to pay down this debt. I don't know. So Blue Ventures, commencing 25th of January 2024, carries a 15% annual interest rate with payments due quarterly. Okay, and it ends on the 24th of January 2026, which is not that far away. I'm just going to go back up to interest. Yeah, $179,000 of interest in a quarter, which is not all that much. But if they didn't have debt and weren't paying interest, it would have been a better quarter. Okay, so nothing too bad with this company. I would prefer companies like this to have no debt, but that's okay. Now let's have a look at any sort of interesting highlights I might garner from this, if that is a word. Major contract wins, North African Airport Authority. They do talk about total contract value of 15.2 million. Other notable wins, fair few airports here. In fact, most of these airports, Adelaide Airport, Queenstown Airport, I was going to say Church Christ Airport, but Christchurch Airport, Wellington Airport, the Good Guys, Detroit Lions, hello, and JFK International Terminal. Notable renewals include Narita, Woolworths, Landsec, Phoenix, and Miami Airport. So a nice little name dropping there, but even with all these customers, they're not making a lot of money. Outlook for financial 26, maintain gross margin improvement, maintain profitable EBITDA, and positive net cash flows from operations. So it's not free cash flow, and launch Beonic's AI-based CCTV product in North America. Launch of the North African Airport Solution announced on 29th of July. All right, so seems okay. One thing I haven't looked at is the market cap of this company, 18.78 million, which is not too high for a company that could be at that inflection point. So, yeah. Anyway, let's have a look at the cash receipts history. Yeah, this company does go back a fair bit because they were known as Sky-Fi. The company listed on the ASX back in 2015, maybe even 2014. Not much movement with that company initially, but you can see really nice growth in receipts for this company from 2015 all the way through to a few years ago. And since then, it's been quite lumpy, up and down, and no real trend in receipts since 2022. So not my favorite receipts history. Just because the last few years we haven't seen any significant growth in receipts. So maybe one of the reasons they have become operating cash flow positive is a reduction in their spending. Okay, so that's cash receipts history for Beonic. Now onto the chart. This is the daily chart. Ooh, the share price did pop up on the day they released their quarterly results, I think. Share price increased 48.8%. So there was a nice reaction from the market in regards to this particular quarter results. Share price has pulled back a fair bit. In fact, on that day, share price reached a high of 37 cents and currently at 26.5 cents. Definitely understand why there was a little bit of selling. Not massive volume came through that day, so it wasn't amazing amount of volume, amazing amount of interest. But it was just enough that the share price did rise. So when you see that sort of rise in the share price on not massive volume, typically it's just a little bit of over-enthusiasm from the buyers. They're just buying on market, which can push the share price up. If they're being a little bit more patient and they put in a limit order, maybe the share price won't rise like that. So this would be just a little bit of enthusiasm, over-enthusiasm from shareholders. Now, other than that, daily chart showing signs of maybe hitting a bit of a floor, and that floor is around 18 cents. If we have a look at the weekly chart for this company, it does not look good. They must have done a capitalization. I'm pretty sure the share price when this company listed was not 250, probably more like 20 cents. So I would say at some point they did a share consolidation. Did I say capitalization? I meant share consolidation. I'm pretty sure they would have. Anyway, so yeah, for me, this chart is not looking crash hot. But maybe the share price has found a floor. And definitely, if the company keeps releasing some nice quality results, that could lead to more interest in the market. Okay, next company is Energy Action. I would have thought this company provides software solutions for energy companies. That's just what I'm thinking right now. So let's have a look. We're driven to make energy easier, cleaner, and cost less. That doesn't tell me anything. Our company doesn't tell me what they do. Our technology, maybe this will give us an idea what they do. Inspired by technology, led by data, trusted by many, our energy procurement platform drives down gas and electricity prices, while our energy reporting technology gathers all your energy information, identifies energy inefficiencies, and so you can reduce ongoing costs and sets you on a path to net zero at a price you can afford. So is this aimed to, I thought this might have been aimed towards energy companies, possibly even aimed towards some individuals. I don't know. Not exactly sure. Just talking about net zero, that sort of thing. Still not sure. Okay, so when I'm not sure, sometimes I just like to go to a company's one of their announcements, more recent announcements, which could be just their activities report, and sometimes they will have an about section. So maybe this will give me a little bit more, and of course, there's no about section. Okay, so let's have a look at. We'll go back 3 months. No, we go back 1 year. And investor presentation. Maybe the letter to shareholders has something in it. There's still no about section. Still no about section. Still, yeah, something to do with net zero energy, that sort of thing. We're delivering core business growth, continuing to improve customer service. Still don't know. So they do. It looks like their customers are businesses. So maybe their customer, the core customer is businesses, and helping businesses control their energy costs or something like that. So I suppose, yeah, we'll say that. Help manage their energy use costs and all that sort of thing. We'll go with that. Okay, so let's have a look at Energy Action's most recent Appendix 4C. We'll also have a look at their activities report as well, and why have I included this company in this particular series. Let's have a look. Well, it all starts off with their Appendix 4C. And the company had receipts of $3.1 million for the quarter, $12 million for the year, so not much growth in receipts through the year, but the company is operating cash flow positive. Even when you exclude the government grants and tax incentives, the company is operating cash flow positive for the full year. Now, are they free cash flow positive? And I would say so. They were for the quarter, but slightly negative for the year. And the reason I'm saying that, even though there's not much capital expenditure, is because of other non-current assets, product development capitalized. So that's like capitalized research and development, which was $684,000 for the year. Now, technically, that is not the definition of free cash flow, but I do include that because it's an ongoing cost. And you can see it, $150,000 for the quarter, $684,000 for the year. So it's $150,000 per quarter. So it's an ongoing cost. Yeah. Anyway, do they have any debt? A little bit of debt, $3 million of a debt, but not too high. By the way, the company, it's one of the first things I should do is just have a look at how big the company is. Not big, I would assume. Yeah, market cap of $13.83 million. Not a lot of shares in issue, only 39.53 million. So there is a chance this company could be illiquidly traded. So no trades today. And if we have a look at the trade history, yeah, this company is illiquidly traded. There were one trade or few trades on the 4th of August. And then the previous day was the 23rd of July. So keep aware that this company is illiquidly traded. But if they keep hitting the financials out the park, that liquidity eventually will improve because companies will be, firstly, individual investors like us will become aware of this company and go, oh, we can buy some shares in this company. The fund managers will stay out because of liquidity issues, but then liquidity will improve and then eventually they'll get in. Okay, so let's have a look at their And yeah, I've already talked about their debt. Now let's have a look at some of their commentary. Talking about loan facility optimization, revenue growth, positive operating cash flow, product investment, cash position. That's one thing I did not look at is cash position. So much cash they have on hand. Yeah, 342,000. Oh, they repaid a bit of debt. So they repaid a bit of debt. So I'm hoping what they say is they remain operating cash flow, free cash flow positive, and they can repay that debt. And so the cash on hand has decreased, but that doesn't concern them because even though they only have 342,000, they are cash flow positive. So they don't have to care about that. I'm hoping that's what they're thinking. In fact, they mentioned cash balance 340,000 with surplus cash used to repay borrowings to reduce interest expense. Let's have a look at that interest for this company. It was only $78,000. But yeah, it all adds up. It all adds up. Okay, so what else? They do talk about cash flows and results and strategy overview. Okay, let's have a look at cash receipts history for this company. And EAX. Here we go. Looks like either this company hasn't been long on the ASX or they've just were started. They not long ago. The ASX required this company to release Appendix 4Cs. For some reason, I thought this company was on the ASX for a while. I could be completely wrong. I don't remember this being a recent listing. So if we just go back a few years, oh yeah, this company has been around for a while. Definitely 2021, 2022. So they were actually asked by the ASX to issue Appendix 4Cs. And if we have a look at the cash receipts history over the last 7 quarters, nothing much has been going on, just going sideways. So this particular cash receipts history does not excite me at all. In fact, there's no trend. There is zero trend here. Now, it's only 7 quarters, so sample size is fairly small, but I'd still like to see some sort of trend for energy action. Okay, now onto the chart for energy action. And I have a feeling nothing. Yes, this is the weekly chart. In fact, the weekly chart, I'm not sure how long, I'm not sure if this has been energy action the whole way. It does look like it probably has been. But the weekly chart does look pretty negative. In fact, there's quite a few weeks here where the share price has dropped a lot. Now, in saying that, if you have a look at the weekly chart, there has been a bit of a turnaround. And that turnaround happened in August of last year. And the share price is now in an uptrend on the weekly chart. Now, still a fair bit of illiquidity when it comes to this company. You can even see it on the weekly chart. This is the chart of a illiquidity traded company. Now, definitely over the last few years, if you go back a little bit further, it looks like it was a little bit more traded back then. Now, let's have a look at the daily chart. And yeah, this is definitely a chart of a liquidly traded company. So you're going to see a little bit of volatility in these sort of companies. In fact, this daily chart goes back 5 years. So that just shows you, because what TradingView does, if there's no trading in a company one day, it just deletes that day. And so this goes back 5 years. But if you have a look at like CBA, which is traded every single day, this chart probably goes back 1 year, maybe. It goes back, just over, 1.5 years. So that's another telltale sign that a company is illiquidly traded when you have a look at a chart on TradingView and it's a long period of time. Anyway, so that's energy action. A few red flags for me for that company. Now on to 8Common. 8Common, Expense 8, Card Hero, some sort of platform for payments, a card payment solution company. Expense 8. Here we go. 8Common solutions deliver enterprise-grade financial transaction processing for government entities, large enterprise businesses, and not-for-profits, with maybe two of the platforms or whatever, Expense 8 and Card Hero. So Expense 8 is elite. So this is what I like. When a company on their homepage tells you exactly what they do. Anyways, Expense 8, leading pure play provider of end-to-end travel expense management software, card application and management, and Card Hero Solution. Not sure if I like that name. Card Hero Solution is an integrated fund disbursement and spend management solution. So that does give you an idea. And they have name dropped some clients, including Woolworths, Broadcast Australia, Amcor, and 90,000 users across 150 state and federal government entities. That can be quite sticky if you do develop a relationship with the government. Okay, so interesting. Now let's have a look at this company's Appendix 4C for the June quarter. I think one of the reasons I haven't really looked at this company in the past is just the name. It's just, so for some reason, the name is a bit of a turn off for me. And that could be not that good. Maybe a bit of liquidity issues. You can see trade history, 7th of August, 4th of August, 1st of August. So a few days there where there hasn't been much trading. And then you can see a fair bit of movement in the share price around those days. So you could say illiquidly traded as well, but not as much as Energy Action. So let's have a look at their Appendix 4C release at 6:28 p.m. In fact, this was one of the last ones, one of the last companies to release an interesting Appendix 4C. And I put this one, typically all these companies are in order of when they release, except this one. And the reason is I excluded another company, and that company was, Rewardle. And the whole reason is they've been suspended for a while. So I went, nope, you're getting knocked out, Rewardle. And I put the last company to release their Appendix 4C in their place, which is 8Common. Hopefully that makes sense. Now let's have a look at their Appendix 4C. Okay, receipts, 2.1 million. For the year, 8.55 million. You would expect with all these customers, a little bit more receipts, a little bit more action. But the company was or is operating cash flow positive for the quarter and also for the year. There you go, for the quarter and for the year. This would be a pretty, maybe not. So it looks like the cash receipts for this quarter doesn't really indicate there was much growth through the year, because if you times that cash receipts by 4, you get about 8.55 million. So I would assume they have decreased some of their costs. And they have definitely administration corporate costs down from 5.9 million for the year to 1.3 million for the quarter. So they've cut back on corporate administration costs. Look like staff costs are remaining about steady. So they have cut some of their spending, and very quiet when it comes to investing and financing activities. A bit of repayment of borrowings. So they must have a little bit of debt. Cash on hand, 101,000. Ooh, I don't like that. Don't like that at all. They probably have some financing facilities, and they do $450,000 in debt, but also have $1 million in unused financing facilities. So even though they don't have much cash, they've got some flexibility right there. Okay, let's have a look at their commentary. Let's just see if they say something interesting here. Whoops, excuse me. And yeah, they're just talking about, they've also included annual recurring revenue, 5.4 million, ARPU, $34.14 with stable user base of 185,000 people. There you go. And not much revenue. Okay. They also talk about the cash position, $100,000, supported by 1.5 million loan facility. There you go. So they actually do talk about the loan facility. And they also have a nice little table here looking at the revenue, SaaS and transaction revenue, number of users, and ARPU, how it's changed over the past year. And not much growth in revenue. A bit of growth in SaaS and transaction revenue. Growth in number of users, and ARPU is also growing. And the CEO, Andrew Bond, says, over the last 9 months, we've executed significant upgrades across infrastructure, billing, and technology, driving meaningful margin and cash flow improvements. There you go. So that's another thing that might be happening to this company, a bit of margin expansion. Okay, now let's have a look at this company. Oh, they might have a few other graphs here. Here's revenue. Recurring SaaS and transaction revenue. It's a nice increase. Okay. And cash receipts. Oh, look at this. Cash receipts. This is exactly what I do. Cash receipts. And I don't do the net operating cash, but I do cash receipts. And this goes back 3 years. Well, 8Common, I go further back than that for you, because this company has been around a fair while. I still remember. And I do remember this company because they're hard to miss with 8Common and the ticker code 8CO. So this company has been around since 2018. Yes. And let's have a look at the cash receipts history. Look, it has increased over the past 7 years. In fact, if you have a look at their first quarter, 1.1 million, now it's 2.2 million. So quarterly receipts have doubled in the past 7 years. I'd like to see receipts growing at a bit of a grow rate. Now, you might say over the past 3 years they have started to grow at a bit of a accelerated rate compared to the first 4 years where receipts were going sideways. So I suppose you could say that. But otherwise, a big meh for me. So I'd like to see this improving. This was not a record quarter. In fact, the record quarter was 1 year ago at 3.1 million. So I'd like to see a new record quarter for 8Common. Okay, now on to the chart for this company. And none of the charts yet have really interested me at all. Maybe this one will. Maybe this one will for 8Common. Just take your time, trading view. We are in no rush at all. Just take your time, no rush. There we go. Anyway, daily chart. It's a big meh for me. That's a massive meh for me. In fact, still in a downtrend. We did see some big volume coming in May, so that could be a sign that maybe the bottom is near. I'd like to see some more volume coming in, but the daily chart is a big meh for me, and I'm assuming also the weekly chart is a big meh for me. Yes, nothing much with this weekly chart at all. And in fact, the share price is at a record low, all-time low. I suppose an all-time low is a record low, but an all-time low for 8Common. Okay, that is all I have for this particular look at 3 companies at least interesting Appendix 4Cs for the June quarter 2025. So we had a look at Beonic. We also had a look at Energy Action and finished off with 8Common. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.